Good day, and welcome to Stock News. I'm Leo, and today we're looking ahead at what promises to be an eventful week in the markets, where central bank meetings, CPI data, and geopolitical developments like a potential ceasefire in Ukraine will be in the spotlight. Inflation remains a key concern for investors. In January, the US Consumer Price Index rose 3% year over year, just above expectations, with monthly inflation hitting 0.5%. Driven primarily by surging energy prices and record-high egg prices. Core inflation has also picked up, and producer-level price increases signal broad-based pressure. Amid this, the market is keeping a close eye on the Federal Reserve, as Chair Powell reiterated, there's no rush to cut rates, pushing expectations for the first Fed rate cut into December. Across the globe, central banks are taking decisive actions. On Tuesday, the Reserve Bank of Australia is expected to deliver a 25 basis point rate cut, with softer than expected CPI data, while the job market remains a mixed picture. Then on Wednesday, the Reserve Bank of New Zealand is set for a second consecutive 50 basis point cut, with inflation forecast to remain in the 1-3% range, despite a weak labour market. Also on Wednesday, the UK will release its CPI figures. Headline inflation is expected to tick up to 2.7%, with core inflation at 3.6%, while the FOMC minutes will likely confirm a hawkish hold, with tariff uncertainty adding to the cautious sentiment. On Thursday, we'll see Australia's jobs report, where expectations point to about 20,000 new jobs, reflecting seasonal patterns with a slight uptick in the jobless rate to 4.1%. Then on Friday, Japan's CPI data is on the agenda. Tokyo's figures are expected to show the fastest pace in nearly a year, driven by fresh food price surges. The week will close with UK retail sales data on Friday, with forecasts for a modest 0.2% increase in January, following a slight decline in December. In addition to the economic data, geopolitical developments continue to shape market sentiment. Recent talks on Ukraine peace have lifted investor spirits, while the market reaction to Trump's tariff announcements appears to have cooled. With the US dollar weakening and European equities, particularly the German DAX, surging up 13% year-to-date, there's a clear shift in global market dynamics. Analysts are keeping a close eye on these developments, as uncertainty remains high, but opportunities abound. Looking ahead, it's a week that could provide important clues about the direction of both the global economy and central bank policies. Whether it's the impact of rate cuts, the latest inflation numbers, or progress on Ukraine peace talks, these factors will likely drive significant market movement in the coming days. Thank you for joining me on Stock News. I'm Leo. Don't forget to join our free newsletter. The link is in the description below for more market insights and updates. Stay tuned for more in-depth analysis and have a great day.